All right, hello, ladies and gentlemen. I am having a little bit of trouble of getting my picture to appear, but since we don't have a lot of time, so we will just move along. Just hopefully this fixes it. There we go. All right, there we go. Looking good here. Let's go, baby. Let's go. Let's go. Let's go. All right, guys. So a super pretty important day. We've been waiting for it a whole week now, right? This is make or break moment, right? So live or die. Okay, so people are asking if I'm buying puts or calls. I'm buying both right now. I have equal positions of puts and calls. Again, for the movement on the number release. So if you get 50 points, I am not only selling my puts, I am just all ports in, same day calls, not even, not even thinking about it. 50, they're not going to do a 50 without pivoting. So it's kind of inconsequential at that point, right? This is a full port moment for me if we do 50. 75, we're going to have to wait and see. We probably get a drop. This is why I have the puts. So in that case, I will take profit on my puts once they spike, and then I'll wait, to play. I'll keep the calls and I'll just wait for them. Are you buying puts now? I bought them before the stream because I was having technical issues. I've been having technical issues all day here. So I bought them before the stream started, but basically I have uh, same day 3,965 calls because they're worth like 200 bucks each, and I have same day 3,730 puts, right? So this is what I have, but basically at this point it doesn't matter. Buy anything that you can have multiple contracts off and it's cheap, right? The moves will be big enough that whatever you're buying will make you money anyway, so don't worry about it, right? It's not going to be a huge deal. Like, get any strike that you can afford at this point. Of course, the more close to the money, the better, right? But work with your account, right? Don't get something that you can't. Okay. So it should be in 3 minutes here, and Omega has been kind enough to post the link for uh, Walter Bloomberg here. Very helpful as always, Omega. Thank you very much, sir. And all right, so let's go here and just where did it open? Oh, there you go. Okay. So let's close everything up here. We just need our charts, we just need our stuff here. That's all we need. Okay. So reminder, FMOC rate decision in 15 minutes. Thank you for the reminder, Walter. Thank you for the reminder. Stay hydrated, folks. It's gonna be one head up. Next few hours gonna be super interesting. So yeah, stay in tip top shape, right? So our puts are up quite a bit, of course, because by the time we bought them, they went down. The market went down a little bit. So honestly, guys, it doesn't matter. Like, once like you just see the rate after, but honestly, like it's kind of a given. If it drops, then it's 75. If it doesn't drop, then it's 50, right? So the prod is asking just straddle. Pretty much, yeah. I mean, like, right, the rate hike is 50-50 at this point, and whatever move we get will be strong enough, right, in order to make one leg very, very profitable and cover the loss from the other one, right? And still we can keep the other leg, in case, of course, the Fed turns around and they're doing the opposite of, the rate hike. So 75 market drops, and then they're dovish, right? So, that will come back to life and go back up again, right? So if that's the case, again, like this is a specific scenario where straddling is not a bad idea at all. At least that's what I'm doing personally. The only thing you have to worry about is IV crush, right? So IV crush will probably hit hard. Again, IV on SPX same day or SPX in general is 25% right now, which does not seem like a lot, but for the SPX it is a lot. As a matter of fact, when I first bought my first call, it was around somewhere here, and it kept going down, and it did not lose value by much because of the very elevated IB, right? So, all right, so we're just gonna keep an eye here. Should be out now, right? So, all right, so it's going up. What do we get? 50? Let's see. Yeah, looks like we're gonna go down here. Looks like it's all over the place. White House says Fed is independent. Biden believes it has the best monetary policies. Who gives a fuck, right? So not seeing anything really. Kind of looks positive here. Did they do 50? Does anyone know what the rates are? 75. Okay, so 75. As expected, nothing groundbreaking here. Looks like the market is reacting positively. So if you guys were watching, read the weekly watch list, I said one way or the other, it's the market is gonna pump on 50 or 75. Looks like I was correct. So that's nice. So I'm gonna start, of course, trimming here. Getting whatever money I can get out of this, of course, before IB sets in. Of course, if my broker would only cooperate, but it is being ridiculously slow and stupid now, so yeah, I might get crushed on both puts and calls. So we're just gonna have to wait here for a second. All right, so I'm gonna place an order to sell at 100%, and I'm gonna just sell one contract right now, right? So let's do here. I bought the contracts at 2. Let's do one at 3.5 first and see if we get a fill here, because the spreads are just going absolutely bonkers, right? Ash Trades is asking if it's 75. Hello, fellow Ash. Yes, sir, 75. 75 is the rate hike. So again, spreads being, of course, absolutely crazy, and the market is just pumping like there is no tomorrow. Which is pretty damn interesting if you ask me, right? Do they know something, right? Is the Fed gonna be hawkish? I don't know. Right? Who knows? These institutional guys, they always know something, right? So again, not getting a fill here so far. The spreads being all over the place. It's not really hitting even 3.5, which would be, almost like 80%. So that's not even working for me. So I'm just gonna wait it out here a little bit and see, what happens once the market calms down a little bit. So very positive reaction like I expected. Uh, Obviously, like the puts were safety because I've been seeing a lot of people saying no, it's gonna dump if they do 75. Didn't make sense to me, honestly. But hey, this is what I get for not listening to myself, right? So, but we of course have the calls, so hopefully that will make up for that. And again, still waiting for a fill here. Again, so far all over the place, lots of buying, lots of selling, crazy. So, all right. So wait, let's see what people are saying here so far. Is that breaking news? Fed's hike rates by 75 points. We already know that. Elon Musk saying get what you pay for. I don't know what the hell that means. Fed hints at possible slower pace of rate increases. Okay, there you go. So in the report, they hinted that they might increase rates, and this is why their market is reacting very positively to it. Now, does that mean I should go in and buy calls right now? Possibly, but not. This is not what I was looking for the throw the sink situation. No, at it. Like no, this is not the case. I want to hear what Powell is going to have to say. It is going to be super important, right? So Powell is basically the deciding factor for me here today because again, the guy might not want to just like cause the market to run up a lot, and he might intentionally say things that cause the market to drop. So we're gonna have to be pretty damn careful here. U.S. Treasury 2-year yields down 7 points at 4.47 after Fed decision. Makes sense. U.S. stocks move sharply higher after Fed rate announcement. S&P up 0.6. Again, also makes sense. Euro rises after Fed statement, up 0.73 on the day. Good for the euro. Blah, blah, blah. Breaking market news, by the way, is another guy you can follow if you want quick stuff. Fed report indicators point to modest increases in spending and output. Okay, well, I mean, still, that's not a good thing, right? So, summary of Fed decision: Fed raises by 75 points. Will uh, peruse policy that is sufficiently restrictive. So this is where the hinting at the slowdown comes from, right? The sufficiently restrictive, right? So we're sufficiently restrictive means if we're doing 50 points, if we're doing 25 points, that's still restrictive, right? Like that's nothing changed here, right? So by sufficiently restrictive, they're trying to say is that we might do the 50 or the 25. We're considering that, right? So that seems bullish. Still committed to drop 2% inflation ASAP. Well, obviously they cannot say that we're not going to do this, obviously. um Taking cumulative tightening lags into account. Sorry about that. All right, so a little bit bearish right there, right? So again, like lags in that case would be like this is what we're make 1K on your SB call shout out in Discord today, earlier today. Well done to you, my good friend. Well done to you, Omega. Did you sell your calls? I don't think I got a fill yet. No, I'm unable to get a fill as of yet. So yeah, that kind of sucks here. I'm just waiting for my account to settle down. I don't know how much up I am or how much down. So it seems that the straddle kind of failed because I am down more than I am up. So the puts got absolutely crushed. Uh, but the calls did not jump up sufficiently. I mean, they did, but I never got a fill, so that's not good. Omega, I'm very happy for you, my friend. All right, so again, we're just gonna wait it out here. I'm not super worried, really. Again, once Jerome starts talking, this is where the real stuff happens. So if I'm able to get a fill, I'm able to get a fill. If I'm not here, no biggie, right? So um, calls starting to get some life into them a little bit here. So hopefully they start going up enough. So we're going to see still the spreads are just absolutely insane, right? The spreads, like I'm seeing here 40, 50 cent spreads on an SPX on a whole call that's just worth like $2 or something like that, right? So uh yeah, we're just gonna have to wait and see here. All right, so yeah, we're just gonna have to stay waiting here, I don't think I'll get a fill. If you don't get a fill, won't it reverse soon? Yeah, I mean, it does seem like I am temporarily screwed on this one. So, yeah, I mean, definitely it might reverse at any time here. People might start selling before Jerome speaks, which is usually what happens actually. We'll see probably some consolidation here. So what you see here in the 1 minute, we'll probably start seeing it on the 5 minute, right? So that's to be expected. So again, at this point, all I can do is just wait, right? So at this point, all I can do, if you're in the same situation as me, uh, all I would recommend is just like wait. There isn't much you can do here really. So I'm personally waiting, and we're gonna see what's up once things settle, right? So again, it's just market seems pretty happy with what's going on here. Again, they taking the hint, but this is not what the market would look like if Jerome starts being super bullish, right? So or gets dovish while he's talking. If that happens, we can expect like a minimum of 5%, maybe even 7% jump today, as pretty much everyone and their mother who actually has cash on the sidelines start jumping in because we Fed starts talking pivot. That means the next 3 months at least will be just purely bullish, right? So a lot of people will probably be waiting for that. So yeah, and again, at the same time, we know that Jerome is someone who does not want to freak out the market in either way, either bad or good. So if he feels that the market is reacting to this too bullishly, he might start getting hawkish, right? So something to keep in mind. So I'm just gonna start looking for the Fed meeting here because we're gonna have to start looking at that soon. Should be in around 20 minutes here. So Fed meeting today. If anyone has the link, feel free to drop it. Uh, I was surprised for a second. First, I think Roku will go up. Okay, so nothing here. Mm, 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 mm. All right, so Fed website, FOMC meetings, November. I don't see a link for the press conference, so usually they have a link here for the press conference just like this, but I'm not seeing it. So Fed meeting, press conference live. There you go. The annoying music that they always have, right? So I'm just gonna drop this link here for people in the chat. If you're not live with us but want to see the Fed speech, here is the link, because a lot of people cannot join the stream for some reasons, right? So this way they can now. They can join our stream, so they can watch this on their own. Also, I'm pretty sure that they have this on YouTube as well. I think the Fed has a YouTube channel, so usually this is where it would show up. All right, so of course, pulling back here, as expected, and of course, I got absolutely fucked on both ends. I'm down quite a bit here, like quite a decent bit. So yeah, it is what it is, but again, still not worried because I know there's a big move coming up. So let's see here if we can try to salvage this position a little here. So what do we got here? Do I want to average down on any of these? So potentially, right? Potentially. So here's what I'm going to do. All right, so I'm gonna get some more puts just in case, since they're pretty damn cheap right now. So why the hell not? Just so I got 3 at 65. That's not much, right? Same strike, same expiry. Let's see here, and calls obviously. So do I want to add more calls? I think I do. I think I do. I think I'm gonna add more calls here. So I'm gonna be leaning more toward calls than I am puts, right? For obvious reasons, for what the Feds are hinting, right? So again, I got filled here, as you guys can see, right at 155. So right now I have 6 calls and 6 puts, but of course the calls are a lot more expensive right now than they were before. So I am more heavily into calls than I'm into puts. Probably will get some more here as it starts dropping down, I think. Well, we'll see. Let's wait and see. Right. So what strike on the puts or in time for puts? Yeah, it does seem like time for puts. The strike for my puts, the ones that I got, is pretty far out. If you can't afford to get something cheaper, better than this, go for it. I am in 3,730 puts that expire today. But if you are able to get something that's closer to the money, I would recommend going for that. That would be my personal recommendation, honestly. So yeah, this is where I'm at right now. So we're gonna have to wait and see. Actually, saying that out loud might be a good idea. I don't know. I'm thinking about selling the puts, just eating the loss, right? And then getting something that's closer to the money now. So let's just check out and see how much the stuff that is closer to the money is worth, right? Because if the price is good enough, then actually my average is pretty low now. My average is 1.29, so that's not so bad. No, I think I'm okay for now until I hear what Mr. Powell has to say. He should be talking 15 minutes anyway, so that's good. Anyway, that being said, let's see how this is affecting certain stocks here, right? So VIX coming down here a little bit, so which makes sense. The AMD is up 4%, Nvidia up 4% here. Tesla still red, unfortunately. Apple slightly up. So we're not seeing any major, again, look, all the stocks. I'm guessing the big pump and the SPY is from the financials. Healthcare also, it's kind of a mixed bag here. But yeah, of course, there you go. So all your banks, all the stuff as you go. See, that makes perfect sense. So you have Visa, MasterCard, SQO payment processors. They're not very happy about that. But all your banks, right? They love higher interest rates. This of course helps them out a lot because most of these are investment banks as well. So of course they're up, decently. This is why, this is probably what's giving the push here to the SPY. Because as you guys saw, like tech is a very mixed bag, healthcare is a very mixed bag, and these are the top three components of the SPY, right? So consumer durables, non-durables not doing much at all. Aerospace is, of course, Boeing is up, and if for you guys who don't know, Boeing finally gave guidance. The last time they gave guidance was in 2019. Today was their investor day thingy, and they're expecting like $10 billion of free cash flow by 2025 or 2024, something like that. So like they're up like 6% and probably pulling up the whole sector with them. So that kind of makes sense. Let's see here. Chinese company did okay. Let's see. Oil, of course, not so hot. That makes perfect sense. How is crypto doing? All right, so crypto looks like it's really loving this news, right? Probably on, like pivot news and stuff like that. And we have seen crypto being a leading indicator for stuff like this, right? So this would not be the first time. Last time when the FMOC, when things were going down, we expected like, hey, if we get 75 meets expectation, it will jump up. It did not for the first time, right? And we actually, I think it was Sandeep who noticed that, and he said that crypto and Bic and Ethereum were down, and yeah, that was correct. In that case, crypto was a leading indicator, so I would say, it does look bullish, from what we're seeing here so far. So, uh, have you made a play yet? I'm just copying futures. Yeah, I got into more calls. This was one of the plays, and averaged down on puts a little bit and got in more calls. So that was pretty much the plays that I made so far. Not going in with much heavier size. I'm already down a lot actually. Pretty much erased like the last 2 days gains, down like I think $1,500 at least so far, because both puts and calls got crushed, and I was not able to fill my order in the calls. So the idea was I would have filled the order on the calls, and then that would have counteracted the puts and then some. But I didn't get a fill. Happens sometimes. It is what it is. But again, not the end of the world here. We're still waiting for the Fed meeting, and we'll be getting hopefully a big move one way or the other, as or after Jerome speaks, and hopefully he makes everything clearer for us. In that case, I will go in like with full size today, so hopefully I can just counteract the loss from today. But if not, no biggie. Again, at the end of the day, one way or the other, we're getting direction today for the next few months, which is really what matters. So all right, so let's go back here to the SPY. Right, SPY, yeah, it's all right. So again, this is still the pretty normal movement that we get every time. So it's a big move up or down, and then consolidation, and then Jerome starts speaking. So this makes sense why big impulsive moves. People are starting to take profits here. They don't want to hold and risk Jerome Powell tanking everything for them. So they're just taking their profits and moving on. We got here to a high point of 0.6, if I believe correctly. So we're now at a low point here. The lowest point was probably around, like, we went down to 0.29 to 8, something like that. So yeah, I think from here all the way up to the next 10 minutes, we're probably just gonna consolidate, right? So yeah, let's see what happens. How our calls doing, if we can get something added to the mix here or not. Let's see. So yeah, I think I think I can bet a bit even better average. So I'll probably get in two contracts at 1.35. I just added them here, as you guys can see, and we buy the equivalent in puts here because again they're super cheap, and you're gonna want to hedge, right? Because the final movement is gonna be a big one, either case. And just FYI, guys, like whatever this ends up, I'm not gonna scalp these in the middle, right? So my positions, I am keeping them till the end of the day, right? But I've learned this lesson before. I sold early a bunch of times and I lost in a lot of profit. So I'm basically kind of collecting contracts now. This is what I'm doing. This is why I bought like very cheap plays here. So usually we get like, if it is truly a pivot here today, we're getting like, I don't know, 150 points at least run up on the SPX, right? So whatever losses we incurred or I incurred, will be made up, and vice versa, of course. This whole huge run up that we had was because people were expecting the Feds to be, dovish and hawkish, right? So if you don't get that, if you don't get the expectations, then yeah, this all goes back to zero, right? The whole big run up, all this, we start giving all that back, because people know what's coming next. What's coming next is probably a new low, a new 52-week low, right? So, yeah. So again, not worried as of yet. Still just, preparing my plays here. Hopefully we're able to time things right, but I'm just gonna let things run till the very end of the day. I will only be trimming once I start getting in the money. So we're still quite a long way from getting in the money on anything that I own, either on the long side or the short side. So we're gonna have to wait here and see, right? So Mr. Powell should be talking in 8 minutes here. So while he does that, I am going to go and smoke a quick cigarette before this starts, right? Just to calm the nerves down, and we'll be back for more. All right, guys. Yeah, also don't smoke. It's bad for you. I'm an idiot. back. I'm back. All right. So, all right, guys. So once again, don't smoke. I'm an idiot. Uh, but it is what it is. We're slaves to our addictions. So, all right. So Mr. Powell should be talking in 5 minutes. Here we go. Hello, Mr. Cool Kid. Uh, should be talking in 5 minutes here, right? So we're gonna find out pretty soon whether he's hawkish or dovish. Mr. Cool said my addiction is losing money in the stock market. Come on, man. Nah, you're not gonna lose money. Come on, this is why you're here, right? Things are gonna turn around. We're gonna make money. Hey, if it makes you feel better, you guys remember how much I was up, right? Last update I showed you, I was at 7,000, right? Here's a sneak peek of how much I'm down. It's 4,000 now. So, yeah, I mean, like, hey, we all lose money. It is what it is, right? Like, there isn't much you can do about it, but you just have to calm down, think rationally about what you're going to do and make sure, that you have a good plan. Yeah, exactly, right? It's a big hit because of the Ivy Crush on both legs. I got like screwed on both legs of that straddle. So, but again, we're gonna make it up, right? We're gonna make it up. So no revenge trading, you know, just keep focused and hopefully we'll make everything back right now. So, losing money is okay, but it's not okay to just give up on everything, and sorry about that. By the way, my dog just absolutely destroyed my setup like right before the meeting. I almost did not stream right before the thing started. I don't know, he the other one, the one with the fucked up leg, he I think because of his leg, something happened to him when he was a child, and I think loud noises extra scare him, so he got freaked out and he just pulled off everything. So let's see. Futures imply traders see 98.4 chance Fed raising. Yeah, dude, that already happened. What the hell are you talking about? How much do you think? All right, this is all old stuff. Let's see what people are saying here. Yeah, he's something. I'm still mad at him. I don't know what freaked him out, but I'm a little mad at him, not gonna lie. All right, so this isn't a Fed pivot. No shit. Elon Musk saying being attacked by both right and left simultaneously. Good sign. Okay, Elon. Okay, so looks like we're rising quite a bit here on the before Jerome speaking. Looks like people are feeling a little bit more bullish here. Looks like people are expecting, because he talks in 2 minutes, so looks like people are expecting, he's gonna go dovish here on us, and he's gonna give us some good news. So we're just gonna have to wait and see what he does, but we'll see. Calls nuts, exactly, right? So our calls actually, look at that. See, this is what I was just talking about. Calls are green again, right? We're up here, so that's nice. Still, of course, did not make up the loss, but hey, our calls are green again. That's nice. So just patience, stick to the plan, believe in what you're doing, and everything should be a-okay, right? So we have a good plan here. I would definitely say my mistake is, as I was going into this, people were freaking out and they're like, no, it's gonna drop, if it says 75%. And I wrote down, like, if you guys read the weekly watch list, I said like 75 will go up, 50% will go up. This is the easiest call in the world, right? And in the Discord room, I had calls and I sold them, right? I did not believe in myself, right? I did not believe in my DD. I did not believe in my what I was doing, and I paid the price, right? And I deserve it, right? So of course, like, this is a lesson to me, right? To me, and just to make sure, I'm gonna make sure I don't repeat the same mistake next time. But it is what it is, right? So we're gonna see soon what happens here. We're up, I think we're up almost $600, $630 here on the calls, right? So these were already down. We're starting to turn green on the day itself, right? So this here is not updating for some reason. I don't know why, but it should be updating soon. We're up almost $1,000 here on our calls, so that should be updating pretty damn soon here. So that's nice. So yeah, let's see if I'm able to trim here a little bit, because I definitely would like to trim one or two calls, and because it'll probably drop back a little. Yeah, there you go. It's already dropping. Okay, so it's a little bit too late. No worries. So he should be talking any second now. It's 8:30. There you go. All right. So that's gonna be fun. So I'm just gonna have here the charts on the other window just so I can keep an eye on them. And let's see what Mr. Powell does here, right? Let's see what Mr. Powell plans on giving us today. So I'm gonna try to raise this as much as I can. See if I can increase the desktop audio here.
Good afternoon.
Hopefully you guys can
My
hear
colleagues
that.
and I are strongly committed to bringing inflation. We have both the tools that we need and the resolve it will take to restore price stability on behalf of American businesses. Work for anyone.
That's a pretty bearish.
In particular, without price stability,
here,
we will not achieve
first
a
words out of his mouth, and the guy's being extremely hawkish.
sustained
right?
period of strong labor market conditions that benefit all. Sustained period of strong labor market conditions that benefit all. The FOMC raised our policy interest rate by 75 basis points, and we can that will be sufficient inflation to
I don't know what's wrong with my
the process
here.
of significantly reducing the
Look
size
at
of our
that.
balance sheet. Restoring price stability or maintaining a restrictive stance of policy for some time. We will require maintaining a restrictive stance of policy for some time. Reviewing economic development. More to say about today's monetary policy actions after briefly reviewing economic development. It has slowed significantly.
And it looks like the Fed website is not looking so hot. I'm just gonna switch to YouTube here quickly. Yeah, it's very laggy. If anyone else has the stream, can they check if their stream is laggy too, or is it just me?
Unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 289,000 jobs per month over August and September. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers.
All right, so this is not good.
The labor force participation
They
rate
have two
is little
mandates,
changed
which
since
is
the beginning
labor
of the year.
and the inflation. and
Inflation remains well above our longer-run goal of 2%.
definitely
Over the
seems
12
hawkish
months
so
ending in
far.
September, total PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has created additional upward pressure on
My
inflation.
man is very hawkish so far.
Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. With today's action, we've raised interest rates by 3.75 percentage points this year. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
Goddamn dogs.
Financial conditions have tightened significantly in response to our policy actions, and we are seeing the effects on demand in the most interest rate sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. That's why we say in our statement that in determining the pace of future increases in the target range, we will take into account the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation.
Okay.
At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal. There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected.
This is a little bit hot.
Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. We're taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices in the longer run.
Okay.
The historical record cautions strongly against prematurely
SPH just
loosening
went
policy.
flat. Yeah, the guy
We will
is-
stay the
he's turning
course until the
hawkish.
job is done.
He's not giving us anything that
To
we want
conclude,
to hear here.
we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Yeah, he didn't mention pivot. He didn't say slow down or anything like that. That's why the market is
Thank you.
going
Colby
down.
Smith with the Financial Times. On the need to slow the pace of rate increases at some point, is a downshift contingent on a string of better inflation data specifically between now and, let's say, the December meeting? Or is that something that the Fed could potentially proceed with independent of that data, given the lagged effects that you mentioned?
So a couple things on that. We do
So the
need to
lag
see
effect is
inflation coming
basically
down
the
decisively,
reports,
and
they
good
usually
evidence
have
of
data
that would
from
be
older
a
months,
series of
right?
down
So
monthly
we're not
readings.
seeing the
Of
current
course, that's what
effect
we'd all
or the
love to
full
see,
effect of it right now,
but that's,
right?
I've never thought of that as the appropriate test for slowing the pace of increases or for identifying the appropriately restrictive level that we're aiming for. We need to bring our policy stance down to a level that's sufficiently restrictive to bring inflation down to our 2% objective over the medium term. How will we know that we've reached that level? Well, we'll take into account the full range of analysis and data that bear on that question, guided by our assessment of how much financial conditions have tightened, the effects that tightening is actually having on the real economy and on inflation, taking into consideration lags, as I mentioned. We will be looking at real rates, for example, all across the yield curve and all other financial conditions, and as we make that assessment.
Okay, so this is really a nothing burger.
Hi,
He didn't say
Howard
much
Schneider
here.
with Reuters. Look, I'm sure there's going to be tons of confusion out there about whether this means you're going to slow in December or not. Would you say that the bias right now is not for another 75 basis point increase?
Good question.
So, what I want to do is put that question of pace in the context of our broader tightening program, if I may, and hit to talk about the statement language
Asshole. He's
along the
being
way.
hawkish.
So I think you can think about our
He's
tightening program
circling
as
around
really
the
addressing three questions. The first of which was, and has been, how fast to go. The second is how high to raise our policy rate. And the third will be eventually how long to remain at a restrictive level. So on the first question, how fast to tighten policy, it's been very important that we move expeditiously, and we have clearly done so. We've moved 3.75% since March, admittedly from a base of 0. It's a historically fast pace, and that's certainly appropriate. given the persistence and strength in inflation and the low level from which we started. So now we come to the second question, which is how high to raise our policy rate. And we're saying that we'd raise that rate to a level that's sufficiently restrictive to bring inflation to our 2% target over time. And we put that into our post-meeting statement because that really does become the important question we think now is how far to go. And I'll talk more but before we meet that test, and that's why we say that ongoing rate increases will be appropriate. And as I mentioned, incoming data between the meetings, both the strong labor market report, but particularly the CPI report, do suggest to me that we may ultimately move to higher levels than we thought at the time of the September meeting. That level is very uncertain, though, and I would say, we're going to find it over time. Of course, with the lags between policy and economic activity, there's a lot of uncertainty. So we note that in determining the pace of future increases, we'll take into account the cumulative tightening of monetary policy as well as the lags with which monetary policy affects economic activity and inflation. So I would say as we come closer to that level, move more into restrictive territory, the question of speed becomes less important than the second and third questions. And that's why I've said at the last two press conferences that at some point it will become appropriate to slow the pace of increases. So that time is coming. And it may come as soon as the next meeting or the one after that. No decision has been made. It is likely
good.
we'll have a discussion about this at the next meeting, a discussion. To be clear, let me say again, the question of when to moderate the pace of increases is now much less important than the question of how high to raise rates and how long to keep monetary policy restricted, which really will be our principal focus.
If I could follow up on that, to what degree was there an importance or weight given to a need to signal this possibility now, given all the concerns really around the globe about Fed policy sort of driving ahead and everybody else, dealing with their own stress as a result?
Well, I think I'm pleased that we have moved as fast as we have. I don't think we've over-tightened. I think there's very difficult to make a case that our current level is too tight, given that inflation still runs well above the federal funds rate. So I think that at this meeting, the last two meetings, as I've mentioned, I've said that there would come a point, and this was a meeting at which we had a discussion about what that might mean, and we did discuss this, and as I mentioned, we'll discuss it again in December. But there's I don't have any sense that we've over-tightened or moved too fast. I think it's been good and a successful program. That we've gotten this far this fast. Remember though that we still think there's a need for ongoing rate increases, and we have some ground left to cover here. And
he just can't help himself.
And cover
He's too
it we
afraid
will.
that the market will earn too much. I don't know. To me, this is hinting that he wants to slow things down. This feels to me like he's just waiting for an
Chair Powell,
excuse.
core
a tiny good
PCE
report
inflation
for
on a
him to
3 or
just
6 month annualized
stop doing it
basis
just
and on a
pump things
12-month
up.
basis has
But
been
like
running
he's covering his ass
in the
way
high
too
fours,
well,
close to
right?
5%.
He's not giving the market anything.
Is there any reason to think you won't have to raise rates at least above that level to be confident that you are imparting enough restraint to bring inflation down?
That's a good question.
So this is the question of does the policy rate need to get above the inflation rate? And I would say there are a range of views on that. That's the classic Taylor principle view. But I would think you'd look more at a forward-looking measure of inflation to look at that. But I think the answer is we'll want to get the policy rate to a level where it is where the real interest rate is positive. We will want to do that. I do not think of it as the single and only touchstone, though. I think you put some weight on that. You also put some weight on rates across the curve. Very few people borrow at the short end at the federal funds rate, for example. So households and businesses, if they're very meaningfully positive interest rates all across the curve for them, credit spreads are larger, so borrowing rates are significantly higher, and I think financial conditions have tightened quite a bit. So I would look at that as an important feature. I'd put some weight on it, but I wouldn't say it's something that is the single dominant thing to look at.
If I could follow up, what is your best assessment or the staff's best assessment right now of the current rate of underlying inflation?
I don't have a specific number for you there. So there are many, many models that look at that. And I mean, one way to look at it is that it's a pretty stationary object, and that when inflation runs above that level for sure, substantially above for some time, you'll see it move up, but the movement will be fairly gradual. So I think that's what the principal models would tend to say. But I wouldn't want to land on any one assessment. There are many different. As you know, many different people publish an assessment of underlying inflation.
To be honest.
Hi, Chair Powell. Thank you for taking our questions. Gina Smilik, New York Times. I wonder, do you see any evidence at this stage that inflation is or is at risk of becoming entrenched?
And that's a useless question.
Is inflation becoming entrenched?
But we have to be careful.
I guess I would start by pointing to expectations. So if we saw longer-term expectations moving up, that would be very troubling. And they were moving up a little bit at the middle part of this year, and they've moved now back down. That's one piece of data. Shorter-term inflation expectations moved up between the last meeting and this meeting, and we don't think those are as indicative, but they may be important in the wage-setting process. There's a school of thought that believes that. So that's very concerning. I guess the other thing I would say is that the longer we have, we're now 18 months into this episode of high inflation, and we don't have a clearly identified scientific way of understanding at what point inflation becomes entrenched. And so, the thing we need to do from a risk management standpoint is to use our tools forcefully but thoughtfully and get inflation under control, get it down to 2%, get it behind us. That's what we really need to do and what we're strongly committed to doing.
Yeah, that's definitely not pivot talk. That feels a little bit hawkish.
Hi, Chair Powell. Thank you for taking our questions.
obvious at
Rachel
this
Siegel
point
from the
that, like, there's
Washington
no way
Post.
how he says it
The
right,
statement
like-
points to the lag times. I'm wondering
I
if
think
you
it's
can
gonna
walk us
depend on the
through
market
how
and
you
what's going
judge
to do,
those lag
right?
effects, what that timeline looks
you can
like
see
over
it
the
from
coming
this
months or
pie,
even
right?
a
Like,
year,
it's all over the
and where
place
you would expect it to show
for
up
a
in different
reason,
parts of the
like,
economy.
He's not giving us much here.
Yeah. So
Hopefully people get what he's saying between the lines.
the way I would think about that is.
To me, what he's saying
It's,
is, like,
it's
give me
a
one good
commonly,
report
for a
and I'll
long
just
time,
up it,
thought
guys.
that monetary policy works with long and variable lags, and that it works first on financial conditions and then on economic activity, and then perhaps later than that even on inflation. So that's been the thinking for a long time. There was an old literature that made those lags out to be fairly long. There's newer literature that says that they're shorter. And the truth is we don't have a lot of data of inflation of this high in what is now the modern economy. One big difference now is that it used to be that you would raise the federal funds rate, financial conditions would react, and then that would affect economic activity and inflation. Now, financial conditions react well before, in expectation of monetary policy. That's the way it has moved for a quarter of a century, is in the direction of financial conditions, then monetary policy, because the markets are thinking what is the central bank going to do, and
Like these
there
assholes.
are
They
plenty
keep
of
hoping the market
economists that
will
also
anything.
think that once financial conditions change, that the effects on the economy are actually faster than they would have been before. We don't know that. I guess the thing I would say is it's highly uncertain, and so from a risk management standpoint, it would be irresponsible not to ignore them. But you want to consider them, but not take them literally. So I think it's a very difficult place to
Now,
be. But
saying
I
the
would
last
tend to
one
be
was
want to
much
be
more fun.
in the middle,
What, you mean
looking
the stream
carefully
or
at what's
the,
actually happening with
meeting
the
itself?
economy,
Probably
and
both, actually,
trying to
I'd
make
say.
good decisions from a risk management standpoint. Remembering, of course, that if we were to over tighten, we could then use our tools strongly to support the economy. Whereas if we don't get inflation under control because we don't tighten enough, now we're in a situation where inflation will become entrenched, and the costs, the employment costs in particular, will be much higher potentially. So from a risk management standpoint, we want to be sure that we don't make the mistake of either failing to tighten enough or loosening policy too soon.
And if I could follow up, should we interpret the addition to the statement to mean that more weight is put into those lag effects than they would have been after previous rate hikes?
So I think as we move now into restrictive territory, as we make these ongoing rate hikes and policy becomes more restrictive, it'll be appropriate now to be thinking more about lag. Of course, we think about the lags are just sort of a basic part of monetary policy, but we will be thinking about them. But we won't be, I think we'll be considering them, but because it's appropriate to do so. Let me say this, it is very premature to be thinking about pausing. So people, when they hear lags, they think about a pause. It's very premature, in my view, to think about or be talking about pausing our rate hike. We have a ways to go. Our policy, we need ongoing rate hikes to get to that level of sufficiently restrictive. And we don't, of course, we don't really know exactly where that is. We have a sense, and we'll write down in in the December meeting, a new summary of economic projections, which updates that. But I would expect us to continue to update it based on what we're seeing with incoming data.
What's the market doing? Yeah, there you go. Yeah, the guy flat out said it. He's like, no,
Axios.
not this time, guys.
As you look around the
Next time.
economy,
Good
the
luck.
clearest impact of your tightening so far has been on housing, maybe some
just ripped off
venture-funded
the
tech
Band-Aid.
companies. It's been relatively narrow in terms of labor market, consumer demand, a lot of sectors. You don't see a ton of effect. Is the pathway and channels through which monetary policy works changing? Is it narrower than it used to be? And on housing in particular, are you at all worried that you're crimping housing supply in ways that might cause problems?
Look at the
down road?
market go, guys.
I don't know that
Market
the
is just
channels
like,
through
look at
which
this.
policy works have changed that
They were
much.
just
I would
dying
say a
off.
big
That makes
channel is
sense.
the labor market, and the labor market is
He
very, very
ripped off
strong,
the
very
Band-Aid.
strong.
That's
And
it,
household,
game over,
of
right?
course,
He said no pivot. He said it. He
strong
said no
balance
pivot. He
sheets.
said
And
it's
so
too
we go
soon
into
to
this
be
with
thinking about it.
a strong labor market and excess demand in the labor market, as you can see through many different things, and also with households who have strong spending power built up. So it may take time. It may take resolve. It may take patience. It's likely to get inflation down. I think you see from our forecasts and others that it will take some time for inflation to come down. It'll take time, we think. Sorry, was I getting to your question there? Oh, housing, the housing part of it. Yeah, so, we look at housing, of course, housing is significantly affected by these higher rates, which are really back where they were before the global financial crisis. They're not historically high, but they're much higher than they've been. And you're seeing housing activity decline, you're seeing housing prices growing at a faster rate, and in some parts of the country declining. I would say the housing market was very overheated for the couple of years after the pandemic as demand increased and rates were low. We all know the stories of how overheated the housing market was, prices going up, many, many bidders, no conditions, that kind of thing. So the housing market needs to get back into a balance between supply and demand. We're well aware of what's going on there. From a financial stability standpoint, we didn't see in this cycle the kinds of poor credit underwriting that we saw before the global financial crisis. Housing credit was very much more carefully managed by the lenders. So it's a very different situation and doesn't doesn't appear to present financial stability issues. But no, we do understand that's really where a very big effect of our policies is.
Yeah, at this point, there isn't much.
Hi,
that we can
Victoria
say to
Guida with
change
Politico.
things.
I wanted to ask about the labor market. You mentioned early on again that job openings are very high compared to available workers, and I'm just curious to what extent you do and don't draw a signal from that. So, for example, if wage growth is slowing and if maybe the unemployment rate starts to tick up, will that make you sort of decrease your focus on job openings? What do you see? Are wages what's really important? How are you thinking about the labor market as it relates to inflation?
So I
So
grabbed some.
we
puts
talk a lot
here.
about vacancies and
fresh
the
ones.
vacancy to unemployed rate, but it's just one. It's just another data series. It's been unusually important in this cycle because it's been so out of line. But so has quits, so have wages. So we look at a very wide range of data on the labor market. So I'd start with unemployment, which is typically the single statistic you would look to, is at a 50-year low, 3.5%. We're getting really nothing in labor supply now. We had, I think, a very small increase this year, which we had really thought we would get that back. Most analysts thought we would
That's
get
even more
some
hawkish,
labor
right?
supply
He's even
coming in.
saying that labor
You
market
mentioned
is one
wages,
of his
so I guess
preferred
I would
things. He's saying,
characterize that
"I
as
don't
sort of a
like what
mixed
we got
picture.
on
It's
it."
true with average hourly
That's-
earnings you
that's not
see.
nice. That's
So
not
I would
good.
call it a flattening out at a level that's well above the level that would be consistent over time with 2% inflation, assuming a reasonable productivity there. With with the ECI reading this week, again, a mixed picture. The headline number was a disappointment. Let's just say it was high. It didn't show a decline. There's some rays of light inside, that if you look at private sector workers, that did come down. The compensation did come down. But overall, though, the broader picture is of an overheated labor market where demand substantially exceeds supply.
Powell woke up today and
Job creation still exceeds, the level that would hold the market where it is. So that's the picture. Do we see? We keep looking for signs that sort of the beginning of a gradual softening is happening. And maybe that's there, but it's not. It's not obvious to me because wages aren't coming down; they're just moving sideways at an elevated level. Both ECI and average hourly earnings. We want to see. We would love to see vacancies coming down, quits coming down. They are coming down. Vacancies are below their all-time high, but not by as much as we thought because the data series is volatile. We never take any one reading. We always look at 2 or 3. So it's a mixed picture. I don't see the case for real softening just yet. But we look at, I guess as I just showed you, we look at a very broad range of data on the labor market.
Because this is what the
So do you see wages as being a significant driver of inflation?
Yeah, we're not seeing.
I think wages have an effect on inflation, and inflation has an effect on wages. I think that's always been the case. There's always a going back and forth. The question is that really elevated right now? I don't think so. I don't think wages are the principal story of why prices are going up. I don't think that. I also don't think that we see a wage price spiral. But again, it's not something you can, once you see it, you're in trouble. So we don't want to see it. We want wages to go up. We just want them to go up at a level that's sustainable and consistent with 2% inflation. And we do think that given the data that we have, that this labor market can soften without having to soften as much as history would indicate through the unemployment channel. It can soften through job openings declining. We think there's room for that, but we won't know that. That'll be discovered empirically.
Thank you so much. Kayla Tausche from CNBC. Earlier last month, the United Nations warned that there could be a global recession if central banks didn't change course. The new UK Prime Minister warned of a profound economic crisis there. And I'm wondering how the Fed is weighing international developments in light of a very strong economy here in the U.S. that would seem to be bucking those trends.
So, of course, we keep close tabs on economic developments and also geopolitical developments that are relevant to the economy abroad. We're in very frequent contact with our foreign counterparts, both through the IMF meetings and the regular meetings with central banks that we have, and I have one this weekend.
You got on calls.
With
not very happy with this.
many central bankers. So we're in touch with all of that. So I guess it's clearly a difficult time in the global economy. We're seeing very high inflation in Europe, significantly because of high energy prices related to the war in Ukraine, and we're seeing China's having issues with the zero COVID policy and much slower growth than we're used to seeing. So we see those difficulties. The strong dollar is a challenge for some countries, but we have it, and we take all of that into account in our models. We think about the spillovers and that sort of thing. Here in the United States, we have a strong economy, and we have an economy where inflation is running at 5%. Core PCE inflation, which is a really good indicator of what's going on for us, is the way we see it, is running at 5.1% on a 12-month basis, and sort of similar to that on a 3, 6, and 9-month basis. So we know that we need to use our tools to get inflation under control. The world's not going to be better off if we fail to do that. That's a task we need to do. Price stability in the United States is a good thing for the global economy over a long period of time. Price stability is the kind of thing that pays dividends for our economy for decades, hopefully. Even though it may be difficult to get it back, getting it back is something that provides value to the people we serve for the long run.
If I could just follow up on Thank you. The Fed has acknowledged in the past that that the tools that you have don't affect things like energy and food prices that stem from some of those conflicts overseas, and they're some of the biggest pain points for consumers. So as you pursue the current path that you've outlined, is there a risk that some of those prices simply don't come down?
So we
Ash,
don't
can you lower
directly
your power
affect,
volume a little bit hard? Oh, I'm sorry.
for the most part, food and energy prices, but the demand channel does
Can you guys
affect them
hear
just
that?
at the
Can you
margin.
guys hear him and hear me now?
The thing about the United States is that we also have strong,
Sorry
in
about
many
that.
other jurisdictions, the principal problem really is energy. In the United States, we also
Again,
have a
getting some
demand
more
issue.
puts
We've got an
here,
imbalance between
you know,
demand and
filling
supply,
when I
which you
can.
see in many parts of the economy. So our tools are well suited to work on that problem, and that's what we're doing. You're right, though. We don't, you know, the price of oil is set globally, and it's not something we can affect. I think by the actions that we take, though, we help keep, you know, longer-term inflation expectations anchored and keep the public believing in 2% inflation by the things that we do, even in times when energy is part of the story of why inflation is high.
Hi, Chair Powell, Janelle Marte with Bloomberg. So the Fed is facing two more ethics-related incidents with the revision of the financial statements from President Bostic and President Bullard speaking at a closed event. So some senators, like Elizabeth Warren, are saying that this is a sign of greater ethics problems at the Fed. Could you talk about what this does to the public's trust in the bank and what the Fed is doing to prevent this kind of behavior from becoming common?
Sure. So you're right. The public's trust is really the Fed's and any central bank's most important asset. And anytime one of the policymakers violates or falls short of those rules, we do risk undermining that trust. And we take that very seriously. We do. So at the beginning of our meeting yesterday, actually, we had a committee discussion of the full committee on the importance of holding ourselves individually and collectively accountable for knowing and following the high standard that's set out in our existing rules with respect to both personal investment activities and external communications. We've taken a number of steps, and I would just say we do understand how important those issues are. I would say that our new investment program that we have is up now and running, and actually it was through that the problems with President Bostic's disclosures were discovered when he filed his new disclosures. That's, you know, we now have a central group here at the Board of Governors that looks into disclosures and follows them and approves people's disclosures and also all of their trades. Any trade anyone has to make who's covered has to be pre-approved. And there's a lag. It has to be pre-approved 45 days before it happens, so there's no ability to game market. So it's a really good system. It worked here.
If you say so.
And I think we all said to each other yesterday morning, we recommitted to each other and to this institution.
We're not going to do anything.
To hold ourselves to the highest standards and avoid these problems.
Right.
Do you have an update on the investigations that are pending?
I don't.
So this is my last buy. At this point, I'm all in. So this is either blow up the account today or we make a lot of money.
Matter concerning President
as,
Bostic to the Inspector
in
General.
hindsight,
Once
this
that
is a stupid
happens,
move, but
I don't discuss it with the Inspector General with anybody. It's just the Inspector General has the ability to do investigations. We don't really have that, so that's what he's doing.
Michael McKee from Bloomberg Television and Radio. Earlier this year, you touted the 3-month bill yield out to 18 months as the yield curve with 100% explanatory power. And you said, quote, if it's inverted, that means the Fed's going to cut, which means the economy is weak. That curve is only 2 basis points away from inversion now. So I'm wondering why you are so confident that you have not over-tightened, particularly given that rates work with a lag.
Well, so we do monitor the near-term forward spread. You're right, and that's been our preferred measure. We think it, just empirically, it dominates the ones that people tend to look at, which is 2s, 10s, and things like that. So it's not inverted, and also you have to look at why things, why the rate curve is doing what it's doing. It can be doing that because it expects cuts or because it expects inflation to come down. in this case. If you're in a situation where the markets are pricing in significant declines in inflation, that's going to affect the forward curve. So yes, we monitor it. You're right, and that's what I would say.
This is kind of dovish.
Follow up. You also said several meetings ago that the risk of doing too little outweighed the risk of doing too much. Is what you're trying to tell us today is that that risk assessment has changed a little bit?
Well, what's happened is time has passed and we've raised interest rates by 375 basis points. I would not change a word.
Getting
in that
dovish
statement.
now.
I think
Now that
until
I
we
got
get
my
inflation
question, now he's
down,
getting dovish.
you'll be hearing that from me. Again, if we over tighten, and we don't want to, we want to get this exactly right. But if we over tighten, then we have the ability with our tools, which are powerful, to, as we showed at the beginning of the pandemic episode, we can support economic activity strongly if that happens, if that's necessary.
What the fuck?
On the other
This
hand,
is very
if
dovish.
you make
I mean,
the
not
mistake in
very
the other
dovish, but
direction
dovish.
and you let this drag on, then it's a year or two down the road and you're realizing inflation behaving the way it can, you're realizing that you didn't actually get it, you have to go back in. By then, the risk really is that it has become entrenched in people's thinking. And,
Okay, this is
and,
good.
the record is that the employment costs, the
In
cost
the
to the
beginning, what
people
he was
that we
saying
don't
was
wanna
like,
hurt,
you know what? So even if that does
they go
happen,
up
it's not the end of the
with
world. But
passage
now
of
he's
time.
saying, well,
That's really
I would rather go
how
too
I look at it.
far
So,
than I would rather,
that isn't gonna change.
risk what
has
happened
changed, though,
with
you're right.
the
We're
sickness
farther
before.
along now.
Right,
And
so
I
that's
think
not
as
okay.
we're
So
farther
that's
along,
hoggish.
we're
That's
now
not too
focused
bad.
on
Spy
that,
bear flagging, it is,
what's,
sir.
What's the
It is-
place? What's
it
the
is
level
spy
we need to
bear
get
flagging.
to rates?
Omega,
And I don't know what we'll do when we
277
get there.
QQQ
By
cost
the way,
0.5.
it
Be
doesn't.
careful with those, buddy.
We'll
Be
have
careful.
to see. There's been no decision
Make
or
sure to take
discussion on
profits.
exactly what
I don't need to
what
tell you. I mean,
steps
like,
we would
you're
take
obviously
at that
doing
point.
so much
But
better than me today, my
the first
friend,
thing
so
is to find your
job.
way there.
Thank you. Chris Rugaber at Associated Press. Just to go back to housing for a minute, you mentioned the impact that rate increases have had on housing. Home sales are down 25% in the past year and so forth, but none of this is really showing up, in, as you know, in the government's inflation measures. And as we go forward, private real-time data is clearly showing these hits to housing. Are you going to need to put a greater weight on that in order to ascertain things like whether there's over-tightening going on? Or will you still focus as much on the more lagging government indicators?
So this is an interesting subject. So I start by saying, I guess, that the measure that's in the CPI and the PCE, it captures rents for all tenants, not just new leases. And that makes sense, actually, because for that reason, that conceptually, that's sort of the right target for monetary policy. And the same thing is true for owner's equivalent rent, which comes off of, it's a reweighting of tenant rents. The private measures are of course good at picking up the at the margin, the new leases. And, they tell you a couple things. One thing is, I think right now, if you look at the pattern of that series of the new leases, it's very pro-cyclical. So rents went up much more than the CPI and PCE rents did. And now they're coming down faster. So the implication is that there are still, as non-new leases roll over and become and expire, right? There's still in the pipeline, there's still some significant rate increases coming, okay? But at some point, once you get through that, the new leases are going to tell you that what they're telling you is there will come a point at which rent inflation will start to come down. And that point is well out from where we are now. So we're well aware of that, of course, and we look at it.
The stuff that we already knew.
But I would say that in terms of the right way to think about inflation really is to look at the measure that we do look at, but considering that we also know that at some point you'll see rents coming down.
The only thing that will save me at this point is that it needs to go down.
It looks like stock and bond markets are reacting positively to your announcement so far. Is that
quickly,
something you wanted to see? Is that a problem, or how that might affect your future policy to see this positive reaction?
We're not targeting any one or two particular things. Our message should be, what I'm trying to do is make sure that our message is clear, which is that we think we have a ways to go. We have some ground to cover with interest rates before we get to the that level of interest rates that we think is sufficiently restrictive. And
That's nice.
putting that in the statement and identifying that as a goal is an important
Which is
step.
basically what I already said
And that's,
before.
it's
Again,
meant
this
to,
is
to
kinda
put that question really as the important one now
repeating
going
basically the
forward.
same thing, so.
I've also said that we think that the level of rates that we estimated in September, the incoming data suggests that that's actually going to be higher, and that's been the pattern. I mean, I would have little confidence that the forecast, if we made a forecast today, if we were doing an SEP today, the pattern has been that one after another, they go up, and, that'll end when it ends, but there's no sense that inflation is coming down. It just, if you look at I have a table of the last 12 months of 12-month readings, and there's really no pattern there. We're exactly where we were a year ago. So, okay. So I would also say it's premature to discuss pausing.
Nice.
And it's not something that we're thinking about. That's really not a conversation to be had now. We have a ways to go.
Wow.
And the last thing I'll say
Flat out
is
saying
that
no,
I would want people to
not
understand our commitment to getting this done, and to not making the mistake of not doing enough, or the mistake of withdrawing our strong policy and doing that too soon. So I control those messages, and that's my job.
Damn. Why is the market not dropping more? That's
Edward
weird.
Lawrence with
The guy's
Fox
pretty
Business.
damn
Thank you,
hawkish. I
Fed
don't know
Chairman.
how
So,
more hawkish you
how
wanna
big of a
get
headwind
after
is
hearing
all the
that,
fiscal
honestly.
spending to what the Federal Reserve is trying to do to get inflation back to the 2% target?
In theory, it was a headwind this year, but I do think the broader context is that you have households that have these significant amounts of savings and can keep spending. So I think those two things do tend to sort of counterbalance each other out. It appears consumer spending is still positive. It's at pretty modest growth levels.
Premium is
It's not
killing me.
shrinking,
The
but
IV,
people
right?
are, and
It's not just
the
chopping
banks
in
that
this
deal with
area.
retail
It's
customers.
killing me. But no,
and,
actually, the
many
majority of my
retailers will
port is
tell you that
puts.
the consumers are still buying,
That's
and
the
they're
problem here,
still
right?
they're fine. So I don't know how big the fiscal headwinds are, and they haven't shown up in the way that we thought they would in restraining spending. So it must have to do with the savings that people have.
What about the spending? There's tens of billions yet to be spent. I mean, from the Inflation Reduction Act, the American Rescue Plan, CHIPS Act, bipartisan infrastructure bill. How does that play into your thinking about the future?
It's demand is going to have some support from those savings, and also from the strong demand that's still in the labor market. We still see pretty significant demand and a tightening labor market in some respects, although I think overall I would say it's not really tightening or loosening. So we see those things, and what those things tell us is that our job is going to require some resolve and some patience over time. We're going to have to stick with this.
Again, very hawkish, right? He's saying
That's
he's
just
not
we
liking
take
the
all
data
that as a
he's
given,
seeing, and he
but we know what
expects
our
the market
objective
to go
is. We know what
down.
our tools can do, and that's how we think about it.
Thanks. We'll go to Nancy for the last question.
Hi, Chair Powell. Nancy Marshall-Genzer from Marketplace. I'm wondering, has the window for a soft landing narrowed? Do you still think it's possible?
Has it narrowed? Yes.
Whoa.
Is it still possible?
I didn't
Yes.
expect him to say yes.
I think we've always said it was going to be difficult, but I think to the extent
He's admitting
rates have
now
to
that
go
it's-
higher and stay
that-
higher
that
for longer, it becomes
soft landing is
harder
might not happen.
to see the path. It's narrowed. I would say the path is narrowed over the course of the last year, really. Hard to say. Hard to say. Again, I would say that the sort of array of data in the labor market is highly unusual, and to many economists, there is a path to. Ordinarily, there's a relationship to GDP going down and vacancies declining, translating
See, this
into
is what I'm saying. He does not
unemployment.
like
or
the
there's Okun's
GDP
law.
going up,
So all those
right?
things are relationships that are in the data, and they're very real. Data's a little bit different this time, though, because you have this tremendously high level of vacancies, and we think on a very steep part of the beverage curve. All I would say is that the job losses may turn out to be less than would be indicated by those traditional measures because job openings are so elevated and because the labor market is so strong. Again, that's going to be something we discover empirically. I think No one knows whether there's going to be a recession or not, and if so, how bad that recession would be. And our job is to restore price stability so that we can have a strong labor market that benefits all over time, and that's what we're going to do.
But just real quickly, why do you feel like the window has narrowed?
Because we haven't seen inflation coming down. The implication of inflation not coming down, and what we would expect by now to have seen is that as the supply side
this guy
problems
just came out today and
had
saying,
resolved
"Hey,
themselves,
I'm gonna
we
make
would have
pretty darn
expected
sure
goods
that there is no
inflation to
run
come
today
down
or
by
tomorrow
now,
or the next
long
week
since by now.
whatsoever."
And it really hasn't, although
Omega says go away,
actually it
pal,
has
so we
come
can
down,
go
but it's
on.
not to
I
the
wonder
extent
if
we had
instead of a
hoped.
teleprompter,
At the
he
same
has
time,
this
now you see services inflation,
I
core
swear to God, I
services
was just thinking
inflation
the same
moving
thing
up.
because I feel like
And,
he went like super
I just think
hawkish.
that the
when
inflation
the
picture
market
has
started
become
going up a little bit, I
more and
feel
more
like someone in
challenging
his
over the course of
earpiece
this
was
year,
like, "Dude,
without question.
dude,
That
it's
means
going
that
up.
we have
You're
to,
not doing it
have policy be
properly.
more
Say
restrictive,
bad things
and that
now."
narrows the path
'Cause
to a soft
I
landing.
swear to God, I feel like the moment the
Thanks very
market
much.
started going up and we broke the bear flag, they were like, "No, no, 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 you're going the wrong direction." All right, he's done. Game over. With 45 minutes to spare, right? So I don't know about you guys, but to me this seems ridiculously bearish. The guy flat out said, "No pivot. We're not in a good place. We are not doing any of that stuff." I don't know. Does anyone here disagree? Did I miss something? Right? Did I misinterpret anything here? I don't know. This whole thing seems mega bearish to me, if you ask me. Looks super bearish. So I don't know, man. We'll see. I kind of went like over the board here, full port puts. So yeah, like IV kind of fucked my port up. I'm gonna need like a continuation here, a big knife throughout the end of the day. I'm pretty much gonna need it to just pretty much keep going down for the rest of the day. We don't have a lot left here, 45 minutes. So if there's any chance of my port being saved, it will be by, just going down the rest of the day. So we're gonna have to wait and see here what happens. But yeah, this is nuts, guys. Like this is no, he went out there and he just flat out said no, period, like no pivot. It is way too early. We're not even considering it. We're not thinking about it. This is not gonna happen. So Joey is saying below 3,800 is blood. 100% agree with you, my friend. Below 3,800, this is the official start of us pulling back literally every inch that we gained since the pivot talk started, right? Again, remember, guys, the only reason why all these earnings did not affect us, the only reasons why we've been going up is because that we were expecting a pivot. Because a pivot, right, the Fed slowdown, all this stuff kind of erases any bad thing that could have happened before, right? So, it's new day, fresh start, all that good stuff, right? So that would have raised that. Now that that's not on the table anymore, now that Powell made it extremely clear that we're just, he's gonna just 75 points is again might be on the table for the next meetings if need be, does not mean he'll do it. Again, the guy could end up just giving us 50, 25 till the end of the year. That is still a possibility. That is still very possible here, right? Nothing is off the table at this point. But for now, he's saying if I need to, if I have to, if this is something that I have to do, I'm doing it, right? So no pivot, right? None of that. If anything, he came out and said he does not like what he's seeing, right? He says that I don't like what's going on with the market currently. This is not the situation that we were hoping for. He even, and I did not think he would even consider saying that, he even said, that he might consider actually that we might not be getting a soft landing anymore, right? So that was nuts. I did not expect him to say that outright. He always kind of danced around that, right? So he always said, no, we're guys, soft landing, soft, and even soft recession. There is a soft, you can get a soft recession. So there's a recession, a full-on blown recession, where this is just like, houses burning, people crying, all that stuff. And of course, you can have a soft recession because recessions are of varying degrees, right? So this is where things, are not as bad as a full-on recession. So I don't know. Again, remains to be seen here. The market does seem to be going down. Would love for it to break these lows here. And again, since I'm in puts, I would love for just for the whole thing to just keep going down till the end of the day. Would really love a sharp big drop here. That would be definitely helpful to my portfolio. Uh, if not, you guys know me. I'm a fighter. As long as I have money in the account, I will keep doing it. Mr. Good, it looks like you're saved, Ash, so far, right? 3,800, like Joey said, right? This is kind of like the big test, right? So we might stay there for a minute or two. Again, the full drop does not have to happen immediately. It could start happening today as people digest the news and figure out, because a lot of people don't understand what's going on, and then like they're waiting for someone to explain it to him. CNBC is gonna report, Seeking Alpha, all these big boys, and they're gonna come out and say, well, this and that happened, all this stuff, and then people are gonna be like, oh, okay, well, that's bad. I'm getting the fuck out of here, right? So we're gonna have to wait and see. Again, it's really a wait and see game at this point. Looks good so far. I really would love a breakdown of the 3,800 level now. That would be very, very helpful. If possible, please mark it. That would be really nice. I would love to see it below 3,800. That would be a huge, huge move. But as you guys can see, of course, like it's not gonna be a quick straight drop. But as long as we're dropping, I am fine with that. That would be okay. So yeah, we're gonna have to wait and see here. So all right. So before we go, let's have a quick look at how everything else is doing. Right. So tech looks like it took a big hit here. Makes perfect sense, obviously. Right. So we see here the Nasdaq futures down quite a bit. Commodities, natural gas flying through the roof. I don't know if it was this way this morning or not, but there is no specific reason why natural gas will go up on what happened, right? Silver and gold are taking a little bit of a hit. That makes sense. Of course, you have here your sectors. As you can see, tech, the XLK is the tech sector, and of course, is taking the brunt of the hit here. Second to the XLE, which is down almost 2%. Now, XLE is energy, so this is your oil companies, all that stuff. Again, this is a risk-off sector. So basically, you would expect this to be green, honestly, with everything else being red, but it is also going down. So this is kind of a mixed bag here. Now, XLF is your finance, which is not doing so bad, again, because they're still pretty damn happy that they got, the rate hikes, and they seem to be dancing around right now. We got a rate hike, we got saved. All right, so Mr. Cool said my portfolio just got bailed out. Yeah, I mean, again, like what did I say before starting the stream, right? Like, trust the plan, right? And the guy just flat out said, right, no more Mr. Good Guy, no more bailouts. We can't do it, we can't afford to do it. Economy is shit, everything is shit. Run for cover, right? So the guy flat out said it. So the only problem we have here, honestly, is that we don't have time by the market ends. I was really hoping to see a bigger drop. Maybe the big drop comes after 3,800 level. That is definitely a possibility. But I would say, guys, if you are in same day puts, start trimming and try getting into tomorrow puts, because that might be a safer play, right? Buy yourself some time here. That's what I'll personally be doing. I'll be shifting money from same day to next day. I'll keep, of course, some lottos, because lottos, you can't help but keep some lottos. It is what it is. But for the most part, I don't know. We only have half an hour left in the market, right? And Theta is gonna start eating it, right? So even if Delta is not helping you out, Theta might just start fucking your shit up, right? So don't mess with Theta, right? So you don't want to be holding a contract that expires in half a fucking hour, right? We don't know what's going to happen. We don't know if we're going to get relief and we're going to get a big jump up or what, right? And of course, you're going to have other people who also have contracts just like you trying to get out as well, right? So it's going to be, a feeding frenzy, if you will, right? So book some profits, get out, leave lottos only, right? Don't do anything stupid, and get into tomorrow puts if you want. If you still think it's the play, tomorrow puts is the play for you. Joey Sanders, sorry, Mr. Cool first said, I think that's me for an options too stressful. Yeah, I mean that's options for you, buddy. We're almost at 3,800. That's nice. Joey Center says 3,792 already. Hey, let's fucking go, bro. I'm with you. Mr. Cool said I'm completely out now. Shish, close call. Exactly, buddy. Exactly. Same day contracts are nothing to mess with. You can actually lose money, not because the stock is going against the direction, it's because it's so thin right now towards the end of the day. Too much people are selling. They keep the price keeps going down, right? Happens a lot, right? Happens a lot. So again, I personally am trying to get out here myself with a few contracts. If I can, please and thank you. Please get me out. Nice. So I got a fill. I'm out here of a few. All right. Looking nice here. Gonna trim two more here at 2.5 if I can. Please and thank you. Please, 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 please fill. Nice. Thank you. Right. We're getting some more depth here. Right. So that's nice. That's very nice. And yeah, I'm gonna sell my remaining contracts here at 3 if I can get 3. Nice, 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 nice. So I still have my 3,730 puts, which I don't think are gonna survive. But yeah, honestly, guys, I took a huge damn fucking hit. That was one hell of a spanking. I am pretty much back down so far, back to 3K, right? So that is not good. I took an absolute spanking today. Yeah, I couldn't get out when I wanted to both times. I'm usually used to trading on the phone. The web portal for interactive brokers is shit, absolute shit, right? So it is what it is. So hopefully I make that money back. I still have puts for tomorrow, so hopefully I make my money back on that. Let's see if I can add some more puts for tomorrow here. I still do have some cash. If anyone, by the way, is also thinking of plays, my thinking is that this is probably gonna keep happening like all the way till tomorrow here. Uh, that's just my 2 cents here. So of course, like feel free to do whatever you think should be done. This is just my 2 cents on the issue. All right, so I am getting now into a few more puts here. So let's see. Let's grab a couple of more puts here if we can. Now, don't you forget, of course, that we are a little bit overextended here, right? But it is an abnormal day, if you will. So, things do happen. We're at 3,780. Yeah, so like again, as expected, below that, it was just complete madness, right? The floodgates opened, if you will. Okay, so I got a fill right here. Believe it or not, the 3,730 puts are coming back to life. Interesting. So I'm just gonna close the calls. Even if I can get $5 for them, that would be pretty nice. I don't think I can, but I hope so. So I'm gonna try. Yeah, just place a market order for those. I don't know what's gonna happen, but I'm gonna try. Mr. Cool says Roku after hours. I think so. I think so, yes. Mohammed is saying, what are your thoughts on Roku? If I remember correctly, Bearish, I have them on the weekly list. I don't remember. I'm not going into these earnings plays because again of the ass fucking that my accounts got today from the IV on both both sides. Bit of an amateur move here by me, but again, I bought in puts for tomorrow. I think, of course, I'm pretty sure we're open down tomorrow pretty damn red. So you know, we're gonna see. We're gonna see. But all right, let me actually look it up for you here since you asked. I believe it will be in this untitled document here. So I think this untitled document, yeah. Yeah, all right, let's have a look at Roku for you. If I remember correctly, it was because I don't like Roku. I know I don't like Roku. So even if if it was bullish, I wouldn't even put it in the list because I don't believe in it. Yeah, bearish activity seems to be dominating this options list. Yeah, again, looks a lot bit, and 20% move in earnings. That's not shabby. So, okay, yeah, flow extremely bearish. So, my according to my research, is I do believe puts are the play here. But yeah, honestly, and bearish on your report. Yeah, thank you, sir. It was indeed bearish, as per the report. So, uh I don't get Roku, right? I don't understand it. I don't understand the need for it as a company. I don't understand how it's a Nasdaq company. I would get it as a penny stock, but I don't get it as a Nasdaq company. It is not a company where you would get. I mean, I don't know, with Disney, with Netflix, with all that stuff. Now I understand some things come preloaded with Roku, but I mean, again, till when, right? Until when are stuff like till when will devices come preloaded with Roku? I don't think for long, right? So, uh, I don't know. Again, with everyone else who might sell Roku devices, their earnings were not doing so well. So if they did not sell as many devices, they probably did not pay the license as much for Roku, I guess, or however, whatever arrangement they have. And of course, the flow. By the way, I use this unusual whales for flow, but like any tool you guys have is cool. So this, for those of you still with me right now and who wants to know how it works. So this is not a free tool. I don't know if they have a free option thing, but they might. I'm not sure really. So what I do here is just go filter tickers, right? So in this case, I want to look at Roku, right? I want to know what's happening. Now, keep in mind that on a day like this where things are pretty damn bearish, right? I want to make sure that I'm not getting the things that people are just selling with the market, right? So you can see here all this flow coming in, right? So this is just for Roku, right? So we can see here lots of bullish calls coming in, a few bearish calls, right? So look at this, and a lot of bearish ones coming in. But again, this is 100, 400, 200. So they're just people like me and you, right? I don't care about people like me and you, what they're doing. Why? Because we don't have any kind of inside information. We're just normal folk, right? We're just traders. We don't have an edge, right? But I want to know what people who have a lot of money are thinking, because these people might have some inside information, right? And if they do, right, I want to guess what it is. So I would put here the premium. I would set the premiums. I'm looking at, yeah, at least 200,000 here, right? Is that the right number of zeros? That is the number of zeros, right? And now I have a much better view, okay? So since I'm playing earnings, which is just today, right? I don't want to be looking at something that, that's too far out, okay? So I will go here to my expiry dates, right? I don't want to know what someone is buying in a few months, okay? So they might have like a long-term play in mind. That does not interest me. So I will uncheck that, and I want to see Friday expiry and the next day expiry and the next. So I would select 3 or 4 weeks out, right? Different people buy different expiries for different dates. So now here, as you can see, I have a much more concise view, right? So for the next people who are buying up to 4 weeks out expiry, right? Everyone is pretty much bearish, right? And these are all buys above 200K, right? So anyone who's buying for the next 4 weeks above 200K is bearish, right? So this is one way I could use to check the expiries. Now, of course, if you want to have a better overview, I can just decrease this a little bit here, right? And go 100,000 so I can get, a better look at the options, and see again, still it does look to me overall bearish, right? You can just we don't have a lot of options here, so you can just very quickly, very easily see this, just using your eyes. Now, of course, if you want to get, again, a better overview, you can just, again, keep adding a little bit more time here, just to see what people are doing. And again, does not really look to be changing, but it does really seem to be pretty damn bearish here. So as per the options flow, Roku does not look very hot. Does that mean it will necessarily miss? Of course not, right? But it gives you sort of a slight edge, right? So did you buy the puts yet? No, I'm not. I'm not doing earnings. Again, like I said, after the spanking I got, I have a lot of money inputs for tomorrow in general for the SPY, not for anything else. I'm expecting a continued sell off. So I'm just I just got my puts here for the SPY, and that's enough from me for today. I'm just, again, moving as much cash as I can out of any position that I have, all into tomorrow puts, hopefully, so I can make up the loss, since this is a play that I believe will play out, right? So I just sold the today 3,730 puts. I don't think we're getting to 3,730 today, and we're getting closer towards the end of the day here. So, I think Theta will just start eating away these contracts, so no need for that. I'm still not getting any sort of market fill here for my calls, which is to be expected. Yeah, those are pretty much all dead here. So it is what it is. All right, so let's see what else. Can you also give your option on Etsy? Yes, sir. I do believe it was calls. Let me just double check here. Etsy. Okay, yeah. So I do remember also the flow was bearish, but I thought it was calls for some other reason because of Shopify, and I think we were getting Etsy bearish flow because of Amazon, because people freaked out because of Amazon. But look at that, look at it, it turned around, right? So it's not fully bearish, right? So it's like half and half here on the big stuff. So you're getting a few bearish, a few callish, but still, again, mostly, again, today, right, for the most part, anything that was bought above $100,000 was bearish. So, kind of, yeah, does not look too good for Etsy, honestly, flow-wise. But my belief is, as a sympathy, to Shopify, again, I know they're not the same business model. I know it's different, but I don't know. I feel as far as e-commerce is related, they're pretty similar, right? They're both e-commerce related. So I think a beat, because Shopify beat, and they beat they beat by quite a margin, right? So I don't know. If you ask me, this is my thinking, but 50-50 on Etsy. I can't be too sure, right? The flow here is, it's very, very clear, right? And again, if the overall premium here, so you can see the bearish premium, right? You have not just with these criteria, just generally for Etsy today, right? For Etsy today, you had the puts premium, 94.5% of all the premium on Etsy today was puts, right? And almost 67% of the volume that came in today was puts, right? So pretty damn bearish, right? Almost does not get more bearish than this, right? So something to keep in mind. I will leave it up to you. I can't really give a recommendation here because I am unsure. This is one I would personally skip when things get like that. I think because of Shopify, it might beat, but bearish. But the flow is super bearish here. So that also is kind of telling. So I will leave it up to you. I would say skip it. Honestly, things are 50-50. We can also have a look here and look on Twitter. Also get some feedback from people. Maybe someone did some DD or has some info that we missed, or some good point. Always also good to get a perspective overall from everyone. So SC 87p earnings, I'm gonna need a lot more from you here. So yeah, it does seem that he has pictures also for unusual flow for, yeah, like I said, looks really bearish here, so makes sense. Yeah, he's just, again, he also is citing the flow. He's saying that the options flow is bearish, and also at times like this, you don't really have much clue on what's going on here. So You know, it's all over the place, honestly, with a stock like Etsy, right? So Etsy, Roku, me. Etsy trading ideas. We don't care about your ideas, bro. Number tiles. Okay, so it does not seem again like anyone has any special insight that we're missing here. It does seem that it's just like puts because the flow is bearish, which I'm not gonna lie, it tracks. It makes sense, right? From my perspective, at least, I look at this and I'm like, yeah, that makes sense, right? So, uh, we're gonna have to wait and see. I think these are the only two earnings after hours today, Etsy and Roku. Tomorrow morning, by the way, if someone wants to play this, sorry, tomorrow after close, we have Carvana, we have Moderna. I think Moderna is before. Yeah, Moderna is in the morning, I believe. All healthcare companies beat, so it might possibly be a good play. SQ super bullish activity. I want to see if okay, so this will be a very good test, right? Because even with everything that's going on today, if SQ still has bullish options, then yeah. See, okay, so today everything was bearish. This should not throw you off though, because of course it's gonna be bearish, right? The stock is down 6%, right? All the stuff that happened today is not good for SQ, right? So, but before look at that, it was pretty damn bullish. So again, 50-50. If it does run up after everything that happened today, it will run up a lot, right? It will run up a lot if it beats. So something to keep in mind. What else? Twilio. Yeah, screw it. And that was the earnings for this week, I think. There's of course more earnings. I already have them prepared. I made a post that has all the earnings for this month and the one after it too. So basically, you can get all the earnings for like till the end of. I think we're pretty much done. We have Nvidia that's pretty far off still. I think Nvidia is on like 13th or something like that. But yeah, earnings are behind us. FMOC is behind us. You know, so we have CPI next week, I believe, or the week after. So that's something, of course, we're gonna keep an eye on. That's for sure. But yeah, for the most part, earnings are done, and all the other stuff is behind us. So that's gonna make life a little bit easier for us. I do believe that for the future, the direction is down, right? This is my personal belief. For reasons we just saw live in front of our own eyes right now. I don't know how more hawkish the dude can get. Like he made it pretty damn clear how things are going, right? So IV for Roku, holy shit, 300. Wow. Yeah, I wouldn't touch that. Uh, dude, if you want to play it, you play it, man. You do you, but I'm not touching 300% IV. What the hell? I need to see this for myself. Wow. Enter. No, man, IV is 100%, which is still very, very high, which is still like super duper high, but yeah, not 300%. I was shocked. I don't think I've seen 300%, personally before. I've seen 150, 160, but I've never seen 300%. So yeah, it's almost 140, 101. Yeah, that makes sense. But damn, man. Still, this is too much for my taste. My thinking also is that if you're playing puts, the good thing is that you might not get Ivy Crush if the market overall keeps going down tomorrow, right? So you'll get the push from the market pushing it down and the miss. I'm just saying, like if the market is bearish, tomorrow you might not have to worry about Ivy Crush. So that's something to keep in mind. But that's only if it misses, because if it beats, then you have a problem on your hands, right? TOS is showing. Yeah, I mean, like I figured that out. Like different tools show different stuff. I would take TOS, honestly. Yours, I would take it over IKBR. I'm not gonna lie. TOS is kind of like notorious for having like some really really good tools. So possible. But to be honest with you, I don't remember seeing 300 ever in my like all years of trading. I don't remember ever coming across it. But hey, what do I know, right? It could happen. Still possible. All right. So again, what I'm doing right now is building a little bit here off a puts position. Again, trying to prepare for tomorrow and hopefully make back some of what we lost. We already actually made back some nice gains for what we lost today. Like, I mean, not, I wouldn't say nice gains, but at some point we were down like to 2,000. Now we're like 3,500. So that's not bad, right? Again, all I need is a fighting chance, and definitely have a fighting chance here. So, not always lost. And if our plays from today play out like I expect them to tomorrow, we might make up all the losses, right? So, fingers crossed, right? Like fingers crossed here. It's not impossible, definitely not impossible. We kind of have direction. We kind of have a little bit of an edge here, so we will press it, and hopefully, things go according to the plan here. All right. Let's see here. Does anyone else have any more questions? Market is closing down in, sorry, not closing down, just closing in around. All right, we got to fill here. I just got one more put if anyone wants to know. Market should be closing in around 14 minutes. So I'm gonna stay with you guys till the end of the market. I mean, why not? Market is closing soon, and honestly, for me, this is really fun. I really enjoyed this. Even with the loss, even with the spanking that I got, this was very enjoyable for me. So, there you go. There you go, Spy. All right. So again, this is very good. I really hope tomorrow. By the way, let's quickly here look at. I want to see how much the SPY can go down, right? So on the 1 day chart, we obviously lost 50 MA, which makes perfect sense. And the next level we have here is a 21 MA at 3,745, right? So my expectations is I do believe we go down a lot more. But my expectations, my hopes is that by tomorrow we get to 3,745, in which case I will start exiting my puts. So this is my play here for tomorrow is I am in puts for tomorrow, hoping for the 21 MA test, maybe even lower. Who knows, right? Again, there will be a lot of pressure on the market now, since people are not sure anymore, where any good catalyst will come from, right? So. And this is definitely something worrying for a lot of people, and I don't blame them. It makes perfect sense. So we'll see. All right, so I'm waiting for this number to update here. It is not, but we're down only $1,000 so far on the day. So looks like the puts are saving us, which is nice, which is quite nice. Really hoping here for a clear breakthrough of the 780. We get a nice breakthrough. You want to end on a very bad note on a day like this, right? So you really want to end on a very bad note. Like you want to have like a new low every single minute, as it keeps going. So you end like that. This will give you a very strong drop down, when the futures market open tomorrow. Sorry, came in late. Are you just inputs for SPX? Yes, I'm just for in for puts. Again, like I was telling folks here, hope the plan is, I'm trying to recover the losses from today, and so far it's going okay, not bad, not good, okay. So definitely lesson learned from today is a lesson that I always say, but I seem to break this lesson on days like this. Is stay the fuck away from same day calls or puts on days like this. So see, I will keep doing same day. I'm not gonna lie, but for stuff like the CPI, things that just like that are very early on the day, right? But we lost money on the same day SPX put when you see how the market is, right? It gets down a lot, and I still lost money on it, right? Just because there's not enough time, right? Data was much quicker than the delta, right? So not gonna be repeating this mistake again. Lesson learned: stay away from same day stuff towards the end of the day, right? So I'm just gonna have sort of a cutoff time. Let's say like what would that be? 3 or 2? I would say after two. After two, I'm not touching, same day stuff, regardless of whether what the market is doing. Not even for a scalp. I will just keep doing it same day. We're seeing here. Okay, so this is what I was hoping for. This is what I was telling you here. Looks like the bears, are thinking what I'm thinking. You want to see again the continued fall down here. New lows keep, being made. This is what you want to see. This freaks out people for tomorrow, right? Again, the close is very important. Last 10 minutes is very important, and you want to see a flurry of, bearish activity just to scare off people. Very common tactic used by the hedge funds and the kind. So definitely something you'd like to see, and it works. I mean, I'm not gonna lie, it works. So ideally, I would love, hopefully, for 10 minutes, if we can, to just drop all the way to 3,752. Tall order, yes, I'm not gonna lie. Possible, very possible. Very, very possible. Let's go back here to the 5 minutes and see what's happening. Oh yeah, definitely not looking good here. Definitely. We get the 10 minutes again. We get a continued fall, right? Just keeps falling and falling and falling. In the last 10 minutes, yeah, tomorrow open is going to be bloody. I mean, we really crossed 3,800 here. So honestly, below 3,800, yeah, there is it's sort of kind of the point of no return. I wouldn't actually be surprised if we go test it one more time as resistance and fall back down. But really, with the current market climate, Nasdaq is down 3.5%. Again, Jerome was super, super, super hawkish. Don't forget, we have god damn it, we have stupid Biden talking today at 4:30 for some damn reason, because we're just waiting for him to save us. But yeah, we have Biden talking. Don't forget about that. So if he might affect your plays in any way, that's something to consider. So our puts are doing well now. We're up a combined of almost $1,000 on both of them, so that's nice. Again, still the account we're back to 4,000 now. That's also nice, but still down overall from 7,000, which we were at a few days ago. So that's I mean, that's bad, but again, we're making it up, so that's nice. And hopefully tomorrow, we'll make it up some more. Hopefully this dies even more, and we claw back all that money. But hey, like, this is a very, very good first step, right? So I'm pretty happy with that. We could have ended the day here at 2,000. That was definitely a possibility. So that would have been a very, very big hit. So it is what it is. Funnily enough, the same day SPY calls, remember them? We were at 3,770. We are now at 3,770. It's just absolutely nuts. Yeah, and we're getting here like a super sell-off towards the end of the day. Just continued selling, right? Which is exactly, again, like I said, this is the best case scenario here. This is what we want to see towards the end of the day. We don't want to see any green candles. Hopefully by the end of the day, we still have 7 minutes to close, so we don't want to see any green candles here. Just bearish, 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 right? And hey, we broke the 70 for a second here. For a minute, we broke the 70 barrier, so that was definitely good. Yeah, I would really love if we again close in the 50s. That would be like the ideal best scenario, because it's a level of support here. Again, with the continued drop, the futures are down 100 points. Don't forget that, right? So what's 10 points more? Would be nice to get that barrier here, 100-point drop, right? That will make for an amazing headline. So hopefully the market gives us like an amazing headline. Market falls 100 points. This will freak people the fuck out tomorrow. There you go, 67. There you go. It pulled back. Damn it. Well, again, like this is what I was talking about. Like you want the headlines, the stuff that will freak out people tomorrow, right? This is what ideally you're looking for. So again, it's a wait and see scenario here, really. We pulled back a little bit and then we're back down below 70s. That's always nice. So yeah, it's a wait and see game at this point. Honestly, not much to do here, really. 5 minutes till the market close. So if it goes up, I'm not selling. If it goes down, I'm not selling either. So not much, honestly, for me to do here, guys. So at this point, I would ask you if you can please like the video. It really does help out a lot when you guys do that. And thank you so much for joining me here today. Hopefully you made some money, on our calls, on the puts, on the calls beforehand. Right. So the call outs were right. Just my execution of them was not the best. Again, I would say my mistake here was buying same day, right? But other than that, everything else that we did was on point, right? So we set calls in the beginning, and if you play those, you would have made some money off them. And then as Jerome was talking, we said we're gonna do puts, and again, those are printing currently as we speak. So hopefully everyone made money. Hopefully I am the only one who lost money. I'm okay with that. And I'll of course, I'll see you guys tomorrow. I like the night, like the end of the day stream. So I'm gonna see if we can do a morning stream and an end of day stream. If you guys are interested, let me know in the Discord if you want an end of day stream. I can definitely work on that. And hey, thank you so much, guys, and I'll see you tomorrow. Don't forget to like the video. Cheers.